All right, guys, welcome back to my stock market technical analysis channel. In this channel, I cover charts. I use all the indicators I can find that make sense to analyze the stock market charts. I called the top in the last crash that just happened. I put out a video calling that pretty much perfectly. And the point that I want to make is use the information that we have to try to anticipate the future. I don't know where the market's going. Nobody does. But this game is a lot like playing blackjack, but having the ability to count cards in single deck blackjack. And basically, when the count is in your favor, you go heavy on your bets. When the count's against you, you pull back and put the minimum bet down and then just manage risk. And that's essentially what we do here is we use the charts, we use the technical indicators, the technical posture to give us an idea of when a move is probable. And then we take a bet on that or take a trade and then manage the risk. And that's really the name of the game. So let's get into the charts. Give me a thumbs up though before we do, because that's essentially the only compensation that I get on this channel. I don't make any money from this channel. The thumbs up and the comments is really the only compensation that I get. So keep that up. I appreciate it. The channel's growing, and that's appreciated. So let's get right into it. If you go back and watch my last video, if you want to see how I anticipate how things are going to play out. But basically, here's what I was saying. Here's the hourly chart. We'll get into the daily, but Triple Q's is tech. And basically what I was saying is we're walking up this trend line here. And the video I put out said, look, we just broke the trend line right there. Or it could have been right here actually. But basically I said we broke the trend line and now I anticipate a move down. And that's exactly what we got right here. We got the move down, nice impulsive sell-off. After hours is probably going to sell off. I would expect a gap down tomorrow. And I think I said that. I said, look, I'm looking for a sell-off and then probably a gap down the following day to trap the bullish money. That's kind of the key here. If you look at the daily, what I was saying the last few days, when we broke into this gap, there's this gap right here that everybody sees. And I said, look, that's such an obvious level that things very rarely play out to the obvious level. So to just ride an uptrend and say, the trend is up and that's your friend, I think is just a little simplistic. You're not taking it into consideration what the chart is telling you, what the next move is coming. So the key here is skate to where the puck is going to be, not to where it is. And basically that's exactly what I try to do. When I see this gap here and I see us moving into this gap over the last couple days, but we do it on low volume, I say to myself, we shouldn't be experiencing low volume breaking into such an obvious breakout level. Breaking into a gap means that you're going to gap fill, and that's the highest probability. So when you break into a gap and you have low volume, that's not confirming. That tells me we're going to break down. And what did we get today? Well, this is what's called an outside day. So an outside day is, if I go to the hourly, you'll be able to see it. Right here is where we opened. An outside day means all prices. We opened here at 228. That means that we traded above the previous day's high and closed below the previous day's low, which was right here. So we had outside price action on the open and the close. And those are reversal candles. That's a reversal pattern. So now we have a reversal candle in play on the daily. You can see that this is a bearish engulfing and an outside day. And what you look for now is continuation. Do we get continued price action the following day? And that is confirming the reversal. Doesn't mean it has to, stick. That could be the end of it. But that's what you look for a reversal. And given the fact that we've now closed below the gap entry, what I was calling for is playing out. Now we got to see continuation. But what I was saying is, look, the gap fill is right here up at 229.70, and we were heading towards there. And I said, I think we're not going to gap fill. I think what we're going to do is get close, make everyone feel like we're going to gap fill. All the bulls, everybody's bullish. You know, market's just V bottom. It's going. We're breaking to all-time new highs, and what happens is it makes it feel like we're going to get there, and then we don't. And sure enough, pretty impulsive selling. Now they got to put the trap in. I think they do that with a gap down. We probably are going to gap down to around this 214.50 level, which is right about here. So we probably gap down here, and then we'll have to see what happens. You know, whether we just consolidate, chop around a little bit. Usually when the selling gets started on a reversal pattern, it's usually pretty impulsive and pretty fast. So doesn't mean it has to be, but that's typically kind of what happens. Kind of like right here. When you see up here, they started to roll over, but then they gapped over and trapped the money. And that day wasn't that impulsive. It came with a big gap, so obviously trapped the money. But look at the following day. Just a big, nasty candle. So that might happen. Just analyze these things. You got to kind of read the chart. You know, you can't just ride a low volume trend up thinking that you're going to be okay because of the Fed, you know, don't fight the Fed or whatever. I mean, yeah, I know don't fight the Fed. Sure, I get it. But the point that I want to make is, let's get rid of that. The point I want to make is that the Fed, you know, has never stopped a recession or a bear market in the past. They've pumped money, they've reduced rates, they play their games, they do what they can. But the market's going to find true market value. It's going to find the value it wants to find and needs to find in order to find equilibrium. So, ultimately, I can't just have a mantra that says buy the dip and don't fight the Fed, because ultimately I think you're going to end up being in a bad spot if you do that. So, all right, so here's the gap entry, 223. That is now resistance. So tomorrow maybe we gap down and run up and tag resistance, then fail. The point is 223.30, right around there, is gap resistance on the hourly chart. So that should hold. And moving down, I see 214.50, the nearest support. If we break below that, we'll have to see. But we got this big level, and I don't have it marked out, but it's right here. This is major support right here. Got to mark it out. 203.50, we'll call it. That's major support. I think we're going to get down there. And then down there is where we'll have to evaluate what kind of, support is actually in this market. But that's the near-term support, kind of the big support. And so we would expect to see some sort of reaction around that level. Look at SPY. SPY closed right at support, basically, but I suspect we gap down back within this trading range again. Another false breakout right there. So SPY is, and it's right there. 286.50 basically is where we closed. After hours looks like we're down, so should move lower. I'm not trading SPY right now, but it's important to watch. We've got some support here at 271. That's the bottom of this trading range. So I suspect we get down there in short order. XLV, look at that. That doesn't get any cleaner. That's a false breakout right there. I get this level right here, 101.20. You can see when we have a reaction here on the hourly chart, a reaction here. See the close? See right there, we got it closed right there, and then above we popped above it, but still closed right there. Here was a breakout, ended up being a false breakout, and then resistance didn't quite get there. You can see resistance right in this area, broke above it, failed, false breakout, back within the range, most likely heading down to the bottom, 96.95, and then we'll have to evaluate. I think we're going to get a breakdown going down. XLF, pointing this one out as being weak. And I kept saying, even though big tech is moving up, I don't know why you'd want to be long a market when you have just one sector rallying and like 5 stocks rallying, and the rest of the market is either flat or selling off. To me, that's such a thinly traded market that it's just the risk reward is not there. The probability is not there. And like I said, when you have a thinly traded market, it's really easy to knock that market down. That's kind of what we saw today. don't expect the FANGs to save the market. You need massive market participation. You need the financials. They have not been participating. And here's an example. So just a clean breakdown. Go back and watch my last video to see how I called that out. Apple, here's Apple, uptrend line here. Now this isn't a complete break. We'll have to see how this opens, but we have this trend line from the lows in the hourly chart. You can draw that out, and we broke it today. So looking for price action to start to move down in Apple to kind of confirm this breakdown. And that's it, guys. That's all I want to do for this second video. I'm going to go ahead and get that out there. Leave a comment, give me a thumbs up, watch some of the other videos, go back and watch the last video to give you context into how I'm reading these charts. And I appreciate the activity. Catch you guys on the next one.